Hello, we are looking at some short examples for the ghost trade. We're going to look at how we take a trade to the short side as price bounces off the 34 and then closes below the 13. These are the ghost trades. These are the medium-term trade setups. And we still need to see all of the different features in play. We still need to see the DPI, validating it in agreement to the trend direction. We still need the parabolic dots out of the way, but these instances are going to be off of the 34. Now, in an example like this, you're going to see that the short term may very well change its trend direction. When it does this, the short-term trend becomes up, but the long-term or the medium-term trend in this case remains down. And that is the way we want to trade. We're not going to pay a whole lot of attention to the 5. We are going to pay attention to the 34 and the 13 if price reaches the 34. If the price reaches the 34, that pullback is strong enough to warrant a trade off of the 34/13. So let's zoom in on this one a little bit. We'll get the blow by blow here, the breakdown. Now, the DPI in this area is becoming a little difficult to see. So when we're looking at the DPI and you can't really determine whether the histogram is red or yellow because the two lines are so close together, we'll just take a quick look at the zero line. So once it drops below the zero line, then we're looking at red. We're looking at a short trade. If it's above the zero line, then we're looking at long. And this validates the short. Right here on this candle, we have the red, and you can actually see there is red in there. I go see red on that histogram bar. So what happens in this case? We have a pullback. The price drops. Oh, there it is. Price drops. We're in a nice downward trend. Price is dropping. Price is dropping. Pulls back into the 34. So we have that pullback into the 34 EMA. If it pulled back just to the 13, then this we'd consider a ribbon trade. But this wasn't the case. It continued to pull back and hit the 34. I know what you're thinking about the ribbon trade right here. Now this is about the ghost trade, but I'm going to validate this. I'm going to answer your question. We've got a short trade that failed. How come this one failed? The gap in between the 34 and the 13 was bigger than the average candle. When you get that, there is a likelihood for price to retrace. This is a trade we would not have taken. Okay, now that that's out of the way, let's get back to the ghost. The ghost trade pulls back to the 34 EMA. So again, we'll zoom into this. And then closes below the 13. So here we get a setup. Hits the 34, closes below the 13. At this point, there's all kinds of reasons why we don't go short. We don't go short because the DPI is yellow. That is telling us the trend that we want to be looking for is up. We don't go short because the parabolic SAR is underneath. It's in the way. And it's a good thing we don't, because price pulls back up and hits the 34 again, and then closes below the 13. On this candle, remember we looked at it here, this is still yellow. Parabolic dot is still in the way. We've got price closing below, hits the dot changes sides, the histogram turns red. This becomes our entry candle. Now the actual entry is on the close of this candle. This becomes the entry. I'll solidify that a little bit. So this candle, this is the entry candle at this price. This is where we go short. From here, we determine our stop loss. Most recent swing high. Now we can choose to use this swing high because it's definitely a swing high. Price did come down, up, and then down again. Or you can choose to use the parabolic dots, which is this swing high. The dot is going to start at the highest high during the period of time where the parabolic dot was on the opposite side. So now the parabolics are on the top. The highest high during that time where parabolics were underneath is right in here. So this could be where your stop loss goes. So let's do that. We'll put our stop loss above there. Now again, I like to leave a little bit of a gap. If you're uncertain about the gap, put your stop on the dot. No problem there. Price generally will not pull back far enough to tag the dot. I just like to give it that little bit of room. Now we figure out what kind of space that is. And we're looking at 37 pips. That is the space from our potential entry to our stop loss. That becomes the target we want to use, 37 pips. So 37 is just under these dots here. Now, when you're plugging this into your platform, you can use actual exact numbers. So we've got 37 pips. Now, this is what happens when the trade progresses. So we've entered here. This is our entry. Once we determine what our stop loss is, we're going to modify the lot size that we're trading, and then we enter the market. And then place our take profit. We've got our stop loss placed, take profits placed, market moves in our direction. Now we manage the trade. So we're going to watch for certain things. So we're looking here at our 2/3 of market move. Once the price hits this 2/3, we can move our stop to break even. Now, this is a great example because we don't get to our profit target on this one. What's going to happen is our stop loss is up here. Price starts moving in our favor. And as price moves in our favor, the stop loss starts coming down, parabolic dot at a time, one dot at a time. At this point, it could be this one or this one, depending exactly where you've determined 70% is. We'll say this one, doesn't matter. Price does pull back and get our entry. But when we have price touch this 70%, we move our stop loss to break even. Price hits that 70% level and then tags us out at break even on the next candle. And then it goes and hits our target. Now that is a shame, but I would rather do this than risk this candle taking off the other direction and stopping us out at a full stop. There's no excuse for that, especially if you've got rules in place that prevent that. So the pullback was enough to stop us out at break even. Now the trend was strong enough that things went in our favor, and they definitely could have gone all the way if we didn't manage the stop in this way. Now, from time to time, this kind of managing your trade you're going to see this as a result. It doesn't happen that often, so it's not something to be too concerned about. But it's great to have this on video as a trade example, just to see how that occasionally is going to work. And so that's this trade. We're out. We don't get to the take profit. We get stopped out at break even, and we wait for the next trade. So let's do that. Let's find another sell trade. Here's a short trade example on the 15-minute time frame. So we are looking at price rising after the trend has been established. We've got a nice short trend. Price rises to the 34. The DPI changes direction. Now, often when the DPI changes direction, you're going to see price rise up to the 34. That is not unusual. We want the DPI to change back down. Again, we've got that area in here where it's getting a little tricky to tell which is which. Now we can see that the DPI turns red at this point. Now, if there's any question, then just put your crosshairs on the 0 line. If the lines are below the 0 line, then we're red. If they're above the 0 line, we're yellow. So at this point, we go, it's this little white candle here. So I'll get rid of this line. Now, price is trending down. So we've got that trend. Now the pullback to the 34. And because it hits the 34, we're looking for a close below the 13. We're not really taking too much consideration as per the 5, the ribbon. It's the conversation between the 34 and the 13. Price pulls up, closes below, so we've got a setup. So we're looking to go short because we know that the technical trend is down. But at this point, the DPI is still saying the trend is up. So we don't want to be looking to sell just yet. But everything else for a sell trade is good. We're looking to go short otherwise. We have, at this point, the parabolic SAR is still underneath. For the next 2 candles, they're underneath. So we couldn't go short even if we wanted to. Now, the next candle flips the parabolic dot over top. We still can't go short because the DPI is yellow. The next candle after that, this little white one, turns the DPI red. Now, I don't like to go short on the wrong color candle. If I'm going short, I'd like to see the entry candle to be gray. This becomes a little riskier. You can do it if you're willing to take the risk, and usually it works out okay, but I like to see the candle close in the direction that I want to trade. And that is the very next candle. we have this candle. It's closed below the 13 parabolic dots on the right side. The DPI is red. We are looking to go short. So from here, now there's a couple of different things we can do with the parabolic as far as the stop loss goes. We can enter at the swing high, or put our stop loss at the swing high up here. Or because price has moved a little bit since that initial candle moved the DPI, we can place the stop loss over this parabolic dot here. It'll give us a pip or two closer to the price. If you're willing to risk that, then it's perfectly fine to do that. Because price moved sideways, we couldn't enter it right away. Parabolic did drop a little bit. We can use that dot because you're going to follow those dots down anyways. As the price moves, you're going to start following those dots with your trailing stop. So it is perfectly fine to put your stop loss over that dot. So decide what you want to do. Give it that extra space, which is what I like to do. Or go above the dot on the candle you enter, or go above the dot of the swing high. Now from here, we know our entry is going to be right here. What is the distance between the entry and the stop loss? We're looking at 15 pips. Determine what 15 pips in profit is. So halfway through that candle. So we've got 15 pip stop loss, 15 pip profit target. Again, all the same rules. We're going to look at 2/3 or 70%, I prefer. When the market hits 70%, I want to move my stop to break even. So again, we've entered here, price is dropping. We can start moving our stop loss along the parabolic dots. So every time price moves a little bit and the dot drops, we can start inching our stop loss closer and closer. At this point, take a look at this. I mean, we're already almost halfway. We've taken our stop loss, the risk, and it's not quite half, but it's pretty close to half. Like, it's cut down substantially. So if we lose this trade at this point, it would be not a huge loss. It won't be the full 1-to-1 that we're risking anymore. It's 65% instead of the whole 100%. Price hits this level right here, stop loss goes to break even, and then price will continue, smash through our take profit, and we'll be out of the trade in profit. I mean, that's perfect. That is a wonderful trade. We weren't really concerned with the fact that the 5 was over top of the 13. Again, with the ghost trade or the ghost setup, we're looking strictly at the 34 and the 13. Now, it's nice when the shorter term trend is in agreement with the longer term trend in this case. And we get that. Once we actually enter the price, the ribbon is in agreement with the medium term. But because price can pull back as far as the 34, we're not really too concerned about what it's doing. If the trade is going to work out, the short-term trend will move back into order. Now let's find another setup, and we'll call it a day. How about? We've got a couple on the daily time frame. I mean, this thing works on all the time frames, right from 1 minute to the day. So let's take a look at. I'll take a look at both of them really quick. We can see this is a nice one. This is one that we may not want to take. Now I'll explain that as well. We have price pulling back into the 34 and then closes below the 13. But this close below the 13 is way over here, and the DPI does not turn red until way down here. Now price has moved maybe farther than I'd like, and I'm not particularly keen on this candle either. It's not that bad because we do have one over here, and these two, including the wicks, are similar. It is a pretty big candle, and if I was to take this, I'd prefer to take the short at the close of this candle. But now by the time we get the close down here, you match the closing price with the top of the entry candle, you get one really monstrous move. And at this point, I mean, could the move be worn out? It could. It's just I wouldn't feel too comfortable with this. I'd like to see a pullback or something at this point. Now, we've got a pullback. It does happen. We get the pullback into the 34, the close below the 13. Parabolic dot is in the way. And the DPI is looking bearish. What's going to happen now is we're going to have a parabolic dot appear kind of where the crosshair is right there. Because we've got all the other requirements, we can choose to go short when price touches the dot and the dot appears on the other side, or wait for the close. Since we got the setup here, all the candles are decent size, the actual trade candles we're looking at are relatively the same, then yeah, I'm willing to take a short at the point that the price hits the dot. We've got the setup in every other way. We've got the technical trend, it's going down. We've got the ghost trade setup. We've got the DPI says bear. So all we're doing now is waiting for the parabolic SAR to agree with us. Once we get that touch, we can enter the market. Now at this point, we know where the dot is. It doesn't change. Once the dot's in place, it stays there. So from there, we can already start planning ahead. We get the dot, we get our stop loss, 252 pips, say 260 pips, stop loss goes over top. So we know that our entry is going to be where the dot is. We know our stop loss is going to go over top. And we know where the profit target is going to be as well. So halfway through those wicks here. Once the price hits that dot and the dot appears up here, then we can enter market and go short. We're trading this thing down. And that is really what we're going to do. Going to take that trade as soon as the dot gets hit, not when the candle closes. Now you can choose to do that. That's a little safer. That's more conservative, but it's going to get you in a little bit later potentially. Sometimes it gets you in at the wrong price. If you wait for a touch of the dot and price retraces, you might be able to get in just a little bit better price if you wait for that close. So there's a comfort zone kind of thing. I like to get into the trade sooner rather than later, but that's just my aggressive trading nature, I'm guessing. So I'll take a trade on the touch of the dot. And in this case, it works out really well. Or draw our line here at 2/3. As the price moves, our stop loss trails these dots. Dot, dot, dot. As we hit this level, I mean, price doesn't go very far, so I guess we couldn't trail it too far. We enter here, next candle hits that level, price goes from following us up here at this dot way down to break even. So the next few candles, these are the dots. Because the dot is behind our stop loss now, that's no worry. That just means that we wait. We wait for the parabolic dots to start moving below the stop loss, and then from there we can start to trail our stop loss. But we don't ever get that chance. What happens is price hits our take profit, gets us out of the trade in profit, and I mean, we're closed at 1-to-1. As soon as we get to break even, though, it's a risk-free trade. We're not going to lose any money on that trade, and that really is the best kind of trade there is. I've said it before. I love it when I hear a trader said, "Oh, I got stopped out at break even." It means they're managing their trade. I love that. It is a great thing to hear. It means that you're doing all the right things and you are protecting yourself, protecting your account. I mean, people that say that they're getting their take profit hit all the time, well, that's great, but are you managing the account? Those are the people you're never going to hear say, "Oh, I took a full loss," whatever. If you get taken out at break even, there is nothing wrong with that, and that is something to be applauded. So this is how we do this. This is managing the trade. Very, very important. So there we go. We've got some sell examples on the ghost trade. The next few videos are going to involve the shark trade. So that's going to be a lot of fun. So come back and watch those. And I will see you in the shark trade videos.